Hello, everybody, and welcome to VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. We continue to bring the VRIC to you each and every week with our series of expert online panels. And I'm very excited for the one we have lined up for you today. We have David Morgan, founder and publisher of the Morgan Report and author of the Silver Manifesto, and Peter Krauth, founder and publisher at Silver Stock Investor and publisher of the Silver Advisor, as well as author of The Great Silver Bull. We're going to discuss the silver markets in the aftermath of Liberation Day. Very interesting times for markets overall. Gentlemen, it's great to have you both on the show.
Well, thanks for having me, Jesse.
It's always fun, Jesse. Thanks for having us back.
Yeah, so pre-Liberation Day, we were almost at $35 silver. Very strong performance, holding steady above 33, 34 fairly consistently. And then, of course, Trump's tariff barrage sent silver tumbling sub $30 once again. Now, having recovered, we're seeing another strong performance today in the face of a drop in the broad market. Gold as well, holding up very well. What are both of your thoughts, first of all, on the whole Liberation Day fiasco and the aftermath of it here, as Trump has done some kind of U-turn and said, well, we're pausing everything except for on China. And now there seems to potentially be a trade war brewing between China and the US. What are your thoughts on that move? And how do you think a further downturn in the market, would you expect silver to continue to perform well in that situation, or could it tumble along with the broad market? David, I'll go to you first.
Well, last question first. Could it tumble with the broad market? Yes, I mean, it can do that. First of all, let's just set the record straight. The most often asked question is, if there's a large sell-off in the stock market, what happens to gold and silver? And the answer is very consistent. They go down with the overall market. The subset is they're usually the first to bounce back. We saw that in the 2008 financial crisis. Silver went from a high of 21 down to under 9, and then went from 9 to 50, went over 550% from the bottom. Forget the numbers on gold. I think it was only off about 300%, but somewhere around there. So when the Liberation Day took place, it was a financial explosion in rhetoric. It was a hand grenade into the financial markets, if you will, and brought on a great deal of uncertainty. And because of that, when people don't know what to do, lots of things happen. And of course, we saw the disruption throughout all the markets, as I just described. I have one thing to add there, Jesse. You didn't ask it, but what's very interesting is right around the move down, there was a huge buy in silver and gold right around first notice day. And this is highly unusual. I'm going to term it the reverse spoof. So what happened was the huge orders came in, myself included. I did an update for my members and said, look, there's a possibility that if these people do stand for delivery, we will be to that place where we've talked about for years, where if there's enough people stood for delivery, the COMEX would have a difficult time making good on all those orders. And I gave a caution that usually these roll over into the later months contracts, and on it goes. What happened was that those orders basically disappeared the next day. And that was kind of a precursor to Liberation Day. And we've really had a tough time, especially in silver, ever since. We're coming back now. But gold took a hit, weathered it well. And as this morning when I looked, I think we're still at a new nominal high today. So that's it. Give it to Peter.
Yeah, I mean, I on that front, I don't have a lot to add. I'll maybe address sort of that first part of your question. Sort of my thoughts about what's going on with this whole, as you said, Liberation Day fiasco and the tariffs and so on. I think something that probably not a lot of people maybe realize or consider. There really are two sides to the coin, and I think both sides have good arguments, and both sides are at fault. And what I mean by that is, the U.S. is putting these obviously big tariffs, or they're on hold now, but put these big tariffs on just about everyone. So what I think a lot of people don't realize is that A lot of these countries already have tariffs. Some of them are overt, some of them are not, some of them are covert, right? And so they have these tariffs on the US for goods that would be imported into all of these countries around the world. And so this is probably something that a lot of people do not realize. And as I say, some of them are obvious. They're measurable and they're known, and some of them are not so obvious intentionally. So that makes these goods more expensive to be imported into these different countries around the world from the US. The second thing is, though, that the other side of the coin is, and it's something that I think, so far at least, I've really only heard JD Vance address, and that is that the big reason, he didn't put it this way, but I will. The big reason that these countries have big tariffs on US imports is because it's expensive for them to buy US goods, because the US has the advantage of the de facto world reserve currency. And as we both, as all three of us know, most, if not all, commodities are priced in US dollars. That's starting to change somewhat as we see the world become polarized. But for all intents and purposes, commodities are priced in US dollars. And so for different countries to have to import commodities and import things from the US from a country that to some extent still has, quite a strong currency is expensive for them. It's like a tax for them. And so I believe that's a lot of the reason why they've had uh, these measurable and these covert tariffs on U.S. goods. So, both sides are kind of, I don't know to what extent that balanced things, but I think that's one of the big reasons that Trump came out and said, enough of this. Um, here we are. We're tired of, to kind of paraphrase what he was saying. We're going to stop being taken advantage of. And so again, I'm not sure that that's really totally the case. They have had the advantage of the world reserve currency. They can quote unquote print all they want and use it to go off and buy goods around the world. And yet others have to buy US dollars at typically an expensive rate to go off and buy US goods and non-US goods that are priced in US dollars. So that's just sort of, something I think people need to keep in mind. Things are not, they're never fairly balanced, but these are, I think, some explanations for how both sides see things and what has triggered some of this.
Yeah, interesting breakdown there. Before we dive further into the silver market, I just wanted to get both your thoughts on how China might respond to, because it seems like they're being singled out now. There's been some speculation that they were kind of the main target all along, and that it does seem to be playing out that way. China has a lot of options here. They can obviously sell off a bunch of U.S. treasuries. We've already seen some early signs. They put a tariff on American goods, I believe, about 84%. And they're talking about potentially banning Hollywood movies, which I find interesting. They've also issued a travel advisory to Chinese citizens telling them it is now dangerous to go and visit America. So they're trying to kind of, I guess, attack the tourism sector or stop Chinese students from going and studying over in the US. How do you think this could escalate from here? Because obviously China is a powerhouse when it comes to the commodity sector. We've already seen them restrict a number of exports, particularly in the rare earth sector. Where do you think this could go from here, and how do you think it could impact the global economy, and particularly when it comes to commodities? David, I'll go to you first.
Whew. Yeah, huge impact potentially. Going to rare earth elements, I have a friend that's, I'll just say, well up the food chain in the rare earth element space. And he works out of Washington, D.C. Quite often and has very strong ties to China. And it's hearsay, but I'll just say it, that they basically are ready to cut off their supply to the U.S. And that would be huge implications militarily and in the commercial aspects. I forget what element it is, Peter may know, but one of the rare earths is needed for Gorilla Glass on our phones. The phones used to break every time you dropped them, and Gorilla Glass is much more robust. And on it goes. And the problem with it is once it starts to escalate, it's hard to turn it back down. It tends to continue that trend. So if you're going to, do this on rare earths, then we're going to do it on rice or whatever. I mean, it goes back and forth. And unfortunately, from my perspective, and I'll say give it to Peter, to me, it's two big egos. You got a Trump ego and you got a Z ego. And these guys won't even take advice once they feel threatened. That's my take. I've never sat down with either one of them, but I've certainly looked at geopolitics a long time and watched what's happened over the course of many years, and Trump in for second term and on and on. So I think it'd be beyond something that could be rectified easily because someone's going to have to give, and neither one of them at this point would, in my view.
Yeah, I agree with you there. And also when it comes to Xi, there's an element of saving face, which is a big part of Chinese culture. He cannot seem to appear weak in front of his people in the face of demands from Trump. And so he has no choice culturally in a sense, but to fight back here, particularly the way that China's, Communist Party is a top-down system of control. He's the guy at the top. He needs to show that power and, beat his chest a little bit to get respect from his people as much as he needs. Peter, how do you view things in terms of how this could play out between China and the US?
Yeah, I mean, I agree with David and with you. I think that these are these are high stakes and big egos, and I don't see either of them giving in easily. But I do think that economics, to some extent, will rule the day. And I think that at some point they will, hopefully it's before too long, but they will find a way between them to realizing that the impact is just too big, and there's too much at stake, and that they will find a way to be able to kind of both declare victory, I think, together, come to some sort of an agreeable deal. But in the meantime, yes, things are tense, and it's crucial in many ways. You and David talked about critical minerals. That is certainly a very big one. Um, we can go on and on about some of that. I will maybe make a bit of a comment about what you said in terms of, what China is saying in terms of, how they're going to cut off, let's say, Hollywood, for example. That to me can be a big one. I don't follow that closely, but I do remember hearing a few years ago only that entertainment, Hollywood, was essentially the largest export, period, for any sector in the US. So that could be a big one, frankly. And that, there could be considerable pressure that would come from Hollywood on Trump, I guess, to reconsider certain things. As far as telling their own citizens or putting out warnings about traveling to the US. I mean, I think internally that'll have some impact. I'm not sure how much actual impact it will have. I mean, I'm hearing that people around the world are having issues going into the US today, and countries all over are warning their citizens that if they travel to the US, there are all sorts of reasons that they could be questioned, detained. I mean, a lot of it is anecdotal, and a lot of it is not. A lot of it is fact. It's being reported on a daily basis. So that's already happening. I think that to the extent that they would, put out these travel advisories, I think it's more to have some internal impact and to look strong towards their own citizenry. But yeah, I mean that's kind of how I take this. I think that there is enough at stake economically. These are the world's two largest economies, and at the end of the day, economics, I think, will rule. And I just hope the pain doesn't have to get too bad, because it could. It really could, with these big egos.
Yes, and there could be a lot of unforeseen collateral effects from a trade war between the US and China that could affect the global financial system, perhaps equities markets, etc. I want to touch on the silver mining sector for a moment. A lot of the pure play silver stocks have actually performed fairly well since around early March of this year. I was just looking at a chart of several of the major ones, and obviously a bit of a drop, but even after this Liberation Day fiasco, they're still performing quite well from what I can see. How do you both view the current health of the silver mining sector? And is this a buying opportunity at the moment? Is this a moment where you see sitting on the sidelines and waiting to see how all of this plays out before entering the space? What are your thoughts, David?
Well, Peter put out a tweet. I think he put it on LinkedIn as well. It showed that the miners, I think, were up 37% for the year. Gold, I forget, 18 or something, and silver around 17%. So finally, and usually the metal stocks will lead a rally in the metals. That hasn't been the case this time. But if we look at the first quarter, they're obviously outperforming. So that's a relief. That's sort of confirmation that we are in the next bull leg up. I think both like Pan American and First Majestic were up like 12% yesterday. So these stocks can move again. They're starting to get interest. I don't really have a lot more to say. I think I'll turn it over to Peter. He does as much on the stock side as I do.
Yeah, I mean, I actually would like to share a chart here. I've got,
Sure.
let me try and do that right now. I've got an interesting one that looks at how the silver ETF has performed, SIL has performed relative to the silver price. And here we go. So that's the first, that's up to date from the start of the year. And the SIL, which, sorry, SIL, yes, SIL, which in fact is not pure silver plays. There are a number of gold miners in there. The fact is that to build an ETF like this, you have to make all kinds of exceptions to have enough companies in there, enough large enough market caps and so on. But it is sort of viewed as an indicator of how silver miners are doing. That's pretty good. So that's at least a 20% leverage over the silver price since the start of the year. And you can see in some extreme volatility in the last couple of weeks, it's gotten pretty crazy. But like David said, I think a good indication that we are starting to see true bull market behavior in silver miners versus silver. And so yeah, I mean things have kicked off. When it comes to is it an opportunity? Um, I'm very near-term cautious. I think that despite that big drawdown that we can see took place last week, I think, and then this quick bounce, I'm not convinced, I guess, that sentiment has fully sort of washed out. I think we're potentially due for another drawdown. It could be somewhere near where it bottomed last week. Maybe it'll be slightly below that. But I think if we do get a second drawdown in the next few weeks, that will potentially be the time to be buying for the near term. So yeah, I mean, to some extent, hopefully that explains my outlook on the stocks and the opportunity going forward.
Yeah, absolutely. And if you were entering the silver mining sector today with both kind of a lower risk profile or a higher one or somewhere in between, just it all depends on the individual investor because everybody has their own level of risk tolerance as well as their own ability to evaluate, different stocks. Because when you're looking at the explorers, obviously that's a whole other skill set than looking at, one of these majors, Pan American or something like that, or a royalty company. Where would you be looking if you're entering the silver market today for the most value, keeping in mind, obviously, that everybody's risk profile is different, David?
It's tough. I'll just go with, my basic philosophy. I'd stay with the majors at this point in time. I mean, we were getting new highs. I have six in the top tier, and three of them were making new highs a few months back while everyone was saying nothing's going on. Well, my folks are pretty happy because they were seeing new highs in their stock portfolio. There's always that, view that we look for. We just did one that's in the Keno Hill area that needed to raise some money. I love the guys. I love the area. There's majors on both sides of them. I mean, but still, it's a tough game. I mean, you're always going to do better if you pick that one out of 4,000 that goes from 10 cents to $10. Problem is, people get the idea that they're going to be the one that picks that one. It's like winning the lottery. It's a little better odds than the lottery, but not much. So when we look at it, we look for things that are potential, excuse me, potentially 10 baggers due to their size. So if you're looking at a project that's just going to discover, usually I'm not interested in those. If they make a discovery, the drills keep coming back and I can get a plan map and see how big it could be, I might be more interested. I don't want to drone on. I'll leave it there.
Yeah, and that's an interesting perspective that you have there about keeping the risk fairly low at this point in time. And like you said, to find that one that goes up, your 100 bagger or whatever is extraordinarily difficult. I'll point out, like, just looking at the uranium sector as an example, the amount of mines in development that are having problems, and there's only a handful of them in the uranium sector, is out of this world. Everybody's the majors are having problems because Atomprom, the world's biggest producer, is having big problems. I mean, so even when you look to the majors in the mining sector, you're going to find risk as well. So I think everybody should be mindful of that. You could have the perfect team, the perfect deposit, economics look amazing. So many black swan events are everywhere in the mining industry. Peter, where would you be looking for value right now in the silver mining space specifically?
Yeah, I mean, I would go. I would stay relatively conservative too, but I'd be willing to go sort of a notch slightly lower, and that would mean, say, the mid-tier producers and some of the developers that have obviously and they're different. Obviously within the developers, you have some that might be slightly lower and some that might be slightly higher risk. But I do think that they're in a sweet spot, in part given because I think that the majors have moved more. I think the majors have plenty more to go. So that I will say as a bit of a disclaimer, but I do think that because they've started to move, you get a little bit more value in that sort of mid-tier and advanced developer category. And like I say, there are differences. There's some developers that I have in the newsletter who have some projects that are already throwing off cash. So that doesn't mean they don't need to go out and raise money. In fact, one I'm thinking of in particular has just gone out and raised a bunch of money because they're actually very close to starting construction on a new large project that is going to be a big deal, big game changer for them in terms of growth and total output. But and then you have some developers that aren't that fortunate. They don't have any cash flow. They do need to purely raise money, but they have some fantastic projects that are relatively large scale, will be very profitable. They're in good jurisdictions. And so, yeah, I think I see plenty of opportunity there.
Well, let's talk about the massive outflows of silver from the LBMA. This has been a big story these days. I spoke to Ed Steer recently, and he was saying that basically this is a supply deficit that eventually is going to hit a brick wall at some point. It's the classic story that we've been hearing for some time now, but I'm wondering how significant both of you think these outflows from the LBMA and the current inventory levels are. David, I'll go to you here as I see you sharing this chart. That's fantastic. Break down what you're seeing when it comes to current silver inventory levels and their potential implications.
Well, as you can see, this is the LBMA holdings in both, free silver, I'll call it, and ETF holdings. And you can see that, it's dwindled off quite a bit. What's interesting about this is, one, that we're down to 22,000 metric tons total, and 16,000 of that is in the ETFs. If you move up to the 2020 move, this I very strongly believe cannot prove what Scott Maynard, Chief Investment Officer for Guggenheim. That one question at Davos, better known as the WEF, was asked, what was his go-to investment for that year? And he said silver. And the guys that were interviewing him almost fell off their chairs. That's a move of about 320 million ounces in a year. into the ETFs. We've never seen a move like that, to my knowledge. I've been looking at this market for over 4 decades. What's interesting is that you can see where my cursor is. Hopefully, you can see my cursor. It
Yep.
leveled off and it's dropped down. And I find that interesting because the algorithms are telling the ETF folks to buy silver. There's no doubt about it. And yet, really, it's relatively flat. The green, as you can see, dropped off really rapidly here, is what everybody's been talking about due to a couple things. I really believe it started with the tariff scare, and then that moved into an arbitrage, and then that moved into a repatriation. So there are really three things that started that came about almost synergistically, one on top of the other. And again, you can see this big fall off. So we're sitting there at the lowest level we've been at, and rather significantly since 2017. So I think I covered that. Back to you guys.
Yeah, Peter, what are you seeing right now when it comes to the inventory levels, and any comments on those three factors that David saw leading to these drawdowns?
I mean, David covered it well. I agree. It's been since we see the dramatic drop, recent drop in sort of the last couple of quarters that really started when Trump got elected, started talking about tariffs. And then I think, what happened was that the metals obviously moved west, but there's some interesting things. It's one thing for the metals to move around. That doesn't cause a deficit. The deficit happens when they come off of those exchanges, right? And whether they're consumed or not, they come off the exchange. Well, we know that, in fact, I should have a chart of deliveries. I don't know if I'm getting ahead of myself here, but if I'm going to try and share that chart here.
Yeah.
The deliveries. So the first thing is the COMEX warehouse stocks have absolutely just, you see a bump up in sort of the last quarter of 2024, but then the very end of 24 and then right through until now, the COMEX inventories have absolutely soared. Now that's one thing. The other thing is that it's the deliveries. Not
Wow.
only has the metal flowed and the inventories have stayed high, but the deliveries have been tremendous. In fact, the March deliveries from the COMEX are the second highest that we have in the last about, guess what that's like 20 years or so. I'm not even sure if we have what kind of data we have prior to that. So, I mean, some of it's anecdotal, some of it I'm going to assume is fact. But what I find interesting is that, I'm hearing that the metal has been flowing to New York. That's one thing. I think it was obviously trying to get ahead of the potential tariffs. If they had to make deliveries, they wouldn't want to have to deliver metal at 25% premium. So that provided that built up a premium over on the silver price. What I find interesting is that I had been hearing that a lot of the metal was going to New York and then essentially going into private vaults in the New York area and not necessarily staying in the COMEX. So I don't know who these vaults belong to and who owns the silver in the vaults. But it certainly matches up with the deliveries coming out of the COMEX. Obviously, again, you would have had large numbers of contracts. People wouldn't want to be caught short not having the metal in the U.S. Before a tariff were applied. Now, what I think is also worth mentioning is that I think that when we saw that the tariffs would not apply to several things, to be fair, but specifically not to gold, not to silver. I think, we had up until that point, we had buy the rumor, and then participants sold the news. The news was that these metals were not covered. What I'm not surprised, essentially, I guess, by is the fact that silver has come off more. It always does. It's more volatile. It is, becoming gradually more of an industrial metal. I'm impressed with gold, frankly. Gold, despite that built-in premium, and then gold being on the list, and so therefore not having tariffs applied to it, still stayed very strong. So that to me is telling. That tells me that there's a lot of stress in the system. It says that people are losing confidence, and it's playing its traditional role. That pullback did not last long. It's bounced back very strongly. Like we said earlier, we're near all-time highs right now still, and I think the pullback, the bigger pullback in silver is probably, in my view, mostly due to the industrial application. And so, with this extreme uncertainty and volatility, risk of I think, at this point, elevated risk of recession, that the market's saying, well, if we do get recession, silver has become, since it's become so much of an industrial metal, there's going to be less consumption of it, and so therefore, the its price has come off to reflect that. To qualify that a little bit, I do think that is probably the concerns about the demand of silver falling off. I think that they are probably exaggerated concerns for a few reasons. It is typical. We've seen it multiple times in the past that silver will sell off when a recession comes along, and when the Fed starts to cut rates. But I put together last year a chart that shocked me actually when I saw what it did was that it showed how silver behaves when the Fed starts to cut rates. Well, what's interesting is that gold takes off right away when the Fed starts to cut rates. And you can see in hindsight that when the Fed is about halfway through a rate cutting cycle, that's about when silver actually bottoms and then starts to take off. And if you look at the average return over the last 3 rate cutting cycles, and you go from the bottom in silver, which again is around halfway through the rate cutting cycle, silver averaged over 300% gains over the next, say, 12 to 24 months. It was really very impressive. So, and to talk a little bit about, sort of how I think the demand for silver, or a potential drop in demand for silver is overblown. Look at the last 2 crises we had when we had the financial crisis, 2008, 2009, when we had the COVID crisis, both times. And I think it's quite telling that governments went quickly to not only stimulus, but justifying stimulus that went a lot into infrastructure, a lot into, promoting a green economy, et cetera. And these are, I guess, in my view, these are relatively easy sells, right, to the population, because they'll say, well, you're going to spend billions or hundreds of billions of dollars. If a lot of that goes into infrastructure, into the green economy is a favorable, type of approach on balance. The spending on infrastructure is something that pretty much everyone will agree. Well, at least I'll get to benefit from better roads, better airports, better, railways, all that sort of thing. So these are easy sells, but what we can't forget is that a lot of that requires a lot of silver, especially when you talk about the green economy stuff. Solar, for example, solar surpassed last year in the US, solar together with wind. So if you combine the two, electricity generated from solar and wind, and you can get most of that is from solar, for the first time in the US last year surpassed electricity produced from coal. And so the projections out for the next 5 to 10 years is that solar will eventually potentially dominate and be the single largest source of electricity. So one other thing I want to say is that the technology is changing. David's very aware of this stuff too. We've gone from the prior, or mostly prior, technology called PERC. These are all acronyms. We're not going to get into the details, but PERC, what's becoming the most dominant technology now is TOPCon. TOPCon takes 50% more silver roughly per solar panel than the previous technology does. So, some of the data I've seen is that even if we saw um, solar panel production come off a little bit or stay flat, the fact that we're transitioning to these technologies that require more silver per panel will continue to keep silver consumption elevated on the industrial side. And that's why, so these are the reasons that I think that, the concerns about the drop off in demand for silver are actually overblown.
And how are we looking right now when it comes to supply deficits? Going back to that conversation I had with Ed Steer, he said we were in the fifth year of a supply deficit for silver. David, what is it that you're seeing when it comes to current inventory levels and just where we're at with silver demand? Great chart here. Walk us through it.
Well, if this doesn't get you excited about silver, I don't know what will. This comes from Matt Watson. It's introduced to Matt by the Silver Institute years ago. Consider him a friend, colleague. So what this shows you is the black line is silver mining, which is roughly 850 million ounces a year, and it tapers off slightly to the right. I think he's correct on that. The red line is mining and recycling, which is roughly a billion ounces a year. So what you'll notice is in 2023, we're above the red line, which is a deficit, which means the above ground stockpile of silver needs to be eaten up, which we've seen for the last 4 years. Ed says 5. I won't argue. Ed and I have been close for years. Now, if you look at the green, that's solar. So what Matt's showing here, solar really isn't growing that much from 2025 onward. Automotive in yellow, yes, it is. Jewelry stays about the same, silverware. So if you start looking at these numbers, you start to see we're at pretty accurately like 250 million ounces in deficit in 2026 projected, okay? If you go out to the latter years, like 2050, you're looking at like 600 million ounces in deficit. Now, the only thing I really argue with Matt about is the silver or the gray bars up here. That's investment demand. Matt shows that as a steady eddy all the way through the next 25 years. I totally disagree with that. And he knows it. I think that as we get into the currency crisis, currency wars, trade wars, and it accelerates, the gold market will continue to make new highs. And at some point, there'll be an aha moment for people saying, geez, I want to buy gold. It's too expensive. I'm going to buy silver. Or maybe they'll see Jesse Day and they'll say, my goodness, I saw those two guys, that one gray hair old man and the sidekick. Sorry, I'm going to confess to that, Peter. But I saw that chart and I said, I've got another 25 years to live. This is a no-brainer. I'm going to start stacking this stuff like, you know what? That's the low case. His high case is actually more bullish than that, but I'll stick with the low case. But again, the gray is the net physical demand. And going back to the first chart I showed, why are the institutions not buying silver? Now, this is where you've got to put on a foil hat because the algorithms are telling them to buy it. But what if the word's out and it is, you know what, we've got to supply this for industry. Don't you dare do a Scott Maynard and buy 320 million ounces of silver in 1 year. If you do that, you're persona non grata. Now, I know that's a big stretch, but I wanted to say it because someone that's been in the silver market as long as I have and studied a lot of the stuff is not about silver, but the Silver Bulls book written by Paul Sarnoff on what really went on in the last few months of the Hunt brothers fiasco will curl your hair if you ever read it. So it's not out of the realm of a possibility remote at that. It is a fact that they should be, could be, might be, would be buying silver, and they're not. Why is that?
Yeah, very interesting thoughts. And I don't think that's too far of a stretch, especially from what we know governments and large players in the financial realm have been capable of in the past. That doesn't seem like a stretch at all. Peter, what are you seeing, both following up on what David's presented with that chart and his outlook and anything you'd have to add to that as well?
Yeah, so I have a couple of charts I'd like to share as well. So
Yeah.
the first one shows the These are charts. I want to just sort of quickly give credit to Jesse Colombo, who does some fantastic work and research in the silver space and beyond. And so, anyways, this is a chart from him, and it shows the structural deficits that we have going back to 2021 and estimated again for 2025. And if you take the averages, you're probably somewhere close to about 200 million ounces a year. Well, the silver supply is about 1 billion ounces a year, and that has practically not moved for the longest time. So we've been short on average. If we include this year, and I think it's going to be higher than 149, but let's say we average it out to about 200 million ounces a year. That's 200 times five is 1 billion ounces. So over 5 years, we are short an entire year's supply of silver. Um, and my argument is that has for the last 4 years been met by above ground inventories. That's why we've seen silver come out of silver ETFs, and we've seen silver come out of the exchanges. And that has slowed certainly in the last maybe quarter or so, or maybe two. But and that's where the silver's come from to meet these deficits. And that's why it hasn't pushed the silver price higher. These big consumers have been able to go out and buy silver, above ground silver, and not pressure the mining or recycling industries to bring more silver to market. Well, this can only go on for so long. Who knows? We have maybe, if I had to guess, I'd say 12 to 18 months left in this kind of game, maybe less, before you can't get that kind of silver. Now, there's again always the argument, and David and I have talked about this before, that there's beyond the ETFs and beyond the exchanges, there's silver that is held privately. There's lots of it, probably a few billion ounces. And the naysayers, so to speak, will say, well, there's lots of silver that will come to market. And I think, I don't want to speak for him, but I think David and I agree that yes, that silver will come to market, but at what price? And that is my argument always. I do not see that silver. A lot of these are very strong hands. I don't see them parting with their silver at $35 or at $40. I see them parting with it at 45 and 50 and beyond. And so, yes, these deficits, if we quote unquote drain the markets and the ETFs, I'm not sure that would completely ever happen, but if it gets to a point where it's crucial and there really are ultra tight markets, and then the prices are high enough, as I say, to eventually pull or attract the silver out of these private hoards, it will happen, I think, only at much, much higher prices. And so that to me is the opportunity. That's why I see silver going so much higher, because we are in these structural deficits and they're not going away. And I'd like to sort of show one other chart, and this is again by Jesse Colombo, and he shows the silver output from mining. And how it has peaked. It peaked almost 10 years ago. It's been falling on balance ever since. And what there, I don't have it in front of me, but I did see a year ago a forecast from S&P Global Intelligence, and they were talking specifically about primary silver miners. So only about 25% of silver comes from primary silver mining, but nonetheless, it's a good indication. And their forecast was out to 2027, and they said they saw silver from primary silver miners continue to drop out to 2027. So we have this clear situation where demand is high, it's well beyond annual output, and yet there's no new silver coming to market. Again, even for recycling, I think you'd need to see considerably higher price levels to attract a higher level of silver coming from recycling. And right now, I would have to assume the capacity for that is relatively limited, and it only contributes about 15% of the annual supply. So, I mean, these are all, I think, important factors to consider. And overall, fundamentally, it just continues to look very, very bullish.
Yeah, I completely agree with both of you in terms of the bullish setup for silver. It's a metal that's hated, particularly by stackers who got in around the $30 level and the silver squeeze movement. We see a lot of hate displayed towards silver. Why isn't it moving? Why isn't it doing everything? We talk about that a lot, but I think that's kind of baked into the bullish setup at the moment because a lot of people have given up, thrown in the towel, and we're still seeing a strong performance. I mean, it's holding up very well today in the face of a broad market. We can't call it a collapse. What are we at right now? Well, it's not insignificant. We're seeing 4.5% on the Nasdaq, nearly 4% on the SPX, and meanwhile, silver's holding its own above $31. It's up. Gold holding up very well, up 3%. So it's going to be fascinating to see how the precious metals perform moving forward, particularly in this era of economic uncertainty. This was a fantastic conversation. David, tell us about the Morgan report, what it is you do there, where people can find it.
Yeah, the best place to find me, you can Google David Morgan Silver, you'll find a bunch of stuff, but the morganreport.com is our main page. And then if you're allowing me, I'd like to just shout out that I'm getting near the end of the documentary. It's at
Nice.
silversunrise.tv. And the producer um, sent me the rough draft yesterday. Actually, haven't had time to watch the whole thing, but I'm pretty happy the way it's come out so far. So if you're so inclined, take a look over there. And thank you, Jesse, for asking me. It's always fun to do with Peter. Kind of neither one of us knew who had what charts, but
That's
they
right.
kind of worked out very well. I think we complemented each other. So thank you for that.
Absolutely. I'll put a link in the description to the Morgan report as well as Silver Sunrise. I'm very much looking forward to that documentary. We've been discussing it for a while now whenever I interview you. Peter, tell us about Silver Stock Investor as well as the Silver Advisor and your book, The Great Silver Bull.
Yeah, so the book you can find on Amazon. It's in print, it's in Kindle, and it's in audio book version as well. Just go to Amazon, you'll find it. And that, just to say quickly, is I think best described as an introduction to silver and investing in silver and the whole opportunity in silver. And it really goes through everything from its history, its uses, and all the way to through to how to invest in it. Other than that, there's my paid newsletter called Silver Stock Investor. You can just Google that as well. And then I started a free service back in January, which basically follows companies that are, I'm going to say, they're certainly not the highest risk. They're across. I'm going to say a different. Uh, they're across the spectrum in terms of risk. They're not the highest risk and they're not the lowest risk. You do have some larger existing producers, billion-dollar cap and up. You have some that are very close to production. You have some that are explorers but have large resource bases and so on. And this is a way for people to basically start to follow companies in the silver space and get an introduction to understanding what their news is when they put it out. What we do is we analyze the news, we summarize it, we comment on it, and we give subscribers lots of information. It's very sort of educational on these companies. It's a way for them to get their feet wet and start following the silver mining space. Other than that, as I said, I'm active on Twitter. You can follow me there. Sorry, now X, Peter_Krauth. And I'm also on LinkedIn. You can find me there as well.
Great. And I'll put a link to all of that below, as well as David's X account, so people can follow both of you there. You both post frequently on silver. So I recommend people follow you there. Thank you so much, guys. It's been a blast having you on, and I can't wait for the next time we have you on. But before we do, David, you've brought up a chart. You've thrown a curveball at us.
Yeah. Well, I was playing with AI, which I don't know much about, but I gave it some information and came up with this little poster here. Everyone's chasing stocks and crypto, but the smart money is quietly stacking silver. Silver isn't just a precious metal. It's the backbone of solar, EVs, AI, and defense. Demand's exploding, supply drying up. 1980, it hit $50 an ounce. Today, 34. The deficit was a trillion. Now it's 34 trillion. Silver's at 30. It's money, scarcity, and might be the most undervalued asset on earth. Go ahead before the world catches on. So,
I love
I
it.
wanted to end there, Jesse.
I love it. That's a fantastic place to end it. Well, thank you both so much, and let's do it again soon.
Look forward to it.
Thank you.